Hey guys, Adam Rose, Vice President and Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. This is another episode of the Mortgage Guy podcast, and this is another market update. And we want to talk a little bit about rates and marketing and what's going on out there. First thing that I love touching on more than anything is lawsuits and incidents that other mortgage companies are doing and mess ups. And as long as I'm not involved in it, amen. I'm happy camper. All right. So first thing, this happened just the last couple of weeks. It's a countrywide company, and we have some local offices in the area. But Loan Depot, unfortunately, ran into a little bit of a cybersecurity incident here last couple of weeks. And the reason we even knew about it before it started getting announced is actually we had one of our loan officers down south actually has a client who's selling their property, and he has that client buying the next. And the buyer buying their property had to put everything on hold because of this incident. So apparently, a small cyber attack got into some of the IT systems in the back office, and they were unable to process, underwrite, close loans, fund loans, do anything. They had to take it all offline, which is a massive disruption, considering the size of this company. I mean, this is a company that services $140 billion in loans on the secondary market, and they had this incident. But it says, Loan Depot is experiencing a cyber incident. We have taken certain systems offline and are working diligently to restore normal business operations as quickly as possible. The company has retained leading forensics experts to aid in our investigation and is working with law enforcement to help get through this as quickly as possible. Now, I don't know how quickly they got it resolved. I know it was a couple of days and they weren't able to close loans or do anything or even process. So hopefully all those customers out there that have been working with Loan Depot has gotten them back on the right track and moving on with their transactions and onto their closings and keeping that market moving. So just a fun little update there. I always think people are interested in finding out some of the crazy that happens in our industry. It's been a fun time. Let me tell you, with the new start in 2024, lawsuits galore. So Guild, very large mortgage independent mortgage banker, is also suing Cross Country Mortgage, CCM, for $10.7 million for, I guess, recruiting violations, you could say. So Guild Mortgage has petitioned the Washington District Court to enforce a $10.7 million arbitration award stemming from a heated dispute with Cross Country Mortgage over alleged employee poaching. So that should be interesting to see how that goes. Cross Country has become one of the leading independent mortgage bankers in the country, privately held. And so we can kind of see why now, right? They are going after as many people as possible and recruiting and growing very, very quickly. But apparently that's not going over well with a couple of companies that they're taking some employees from. Next one, Country Club Mortgage. They laid off 100 employees. Basically, it's a California-based company who ran into some issues over the last 6 months or so. You know, because we've talked about the changing in the market and the profit margin. It's shrinking in our industry, and a lot of companies are being bought out. They're combining with other companies trying to stay alive, and this is just one of the victims of this industry that just occurred. So 100 employees, but here's the thing. It just says 100 employees, but, you know, this company has to be going down in full anyways because their CEO, their president, their finance manager, credit risk officer, they're all laid off as well. So if the head of the snake is gone, this company, unfortunately, is going to be folding there and based out of California. So we got a lot of stuff happening here. First Republic, another company. So this is interesting. So two former First Republic brokers are suing the Federal Deposit Insurance Corporation, the receiver of First Republic, because they were fraudulently induced to accept jobs mere weeks before it collapsed last year. Interesting, right? So they're being sued for like $9 million because they convinced a couple of brokers to come over and join them. And within a couple of weeks of them joining, the company went bankrupt. Isn't that fantastic? And that's just lovely. That's that large company style, just kind of pulling people over and trying to grow and dig themselves out of a hole that they can't get out of. So that's just some quick updates, guys. I know some boring stuff, but let's quickly talk about the zip codes with the highest foreclosure rates. I know a couple months ago we talked about how foreclosures were starting to tick up just a little bit, not much, but the foreclosure starts had risen so much, but foreclosures were kind of stagnant. It's very weird. But they came out with a new stat recently. All right, foreclosure filings reported on 357,000 properties in 2023. That is crazy number. Now that again, that's foreclosure filings. Doesn't mean that they actually occurred. They went to sheriff's auction. They're gone. That's simply stating they were so significantly behind they filed for foreclosure, but it doesn't mean it went through. All right. So let's go with the zip codes. The only zip code I want to focus on is the one that's in the number 4 position. Okay. I guess we can hit. I'll tell you what. Let's do it this way, shall we? Illinois. 2 zip codes in Illinois. They are ranked number 1. Oh, I'm so sorry. No. There's 3. There are 3 different Chicago zip codes. So the number 1, the number 3, and the number 6 zip codes in the country, topped out for foreclosures, are all in Chicago. That is nuts, right? Now that's crazy. To have the top 10 or be in the top 10, and all 3 of them are in the same city. The other one I wanted to focus on though is Cleveland. So Cleveland is showing up in the top 10 of zip codes that have the highest foreclosure ratio. Now I'll be honest with you, I really do believe is because there are a ton of investors in Cleveland that buy investment properties, single, multifamily, duplexes, you name it. The 1 to 40 units, huge. We personally have financed dozens of investment properties for investors in the Cleveland market just because the price is right, and they're able to lock up. There's a ton of duplexes, like I said, in multifamilies, and that's the only thing I can help explain why that might be the case, why they're at number 4 on the highest foreclosure ratios in the country right now, is mainly because there's a ton of investments there. And when people get into trouble financially, they're not going to let go of their primary residence, right? Now, the first thing they're going to get rid of, they're going to unload these investment properties, either try to sell them, just deal with them and just set them aside and just forget about it. Because again, with the amount of investments that are in Cleveland, there's a ton of out-of-state investors buying those properties. It's not necessarily people that live in Cleveland that are buying those investment properties. Well, personally, we've experienced a lot of California investors, Texas investors, a lot of people all over the country that invest in Cleveland because it's just so inexpensive. And the amount of multifamily properties there is just unbelievable. So great opportunities for them to grow their portfolio, but obviously it's not working out very well, and that's going to have quite an impact on the local markets up there in Cleveland. Blackstone. So I also talked about how the federal government is trying to pass along some legislation trying to eliminate the hedge funds from owning so much of the market out there. And, Blackstone, the biggest one, they're doubling down. So before this all happens, and they better hope it doesn't happen then, so they're doubling down on the housing market with the acquisition of Tricon. So Tricon is another massive hedge fund company that invests in real estate market. And Tricon owns 40,000 homes. Good Lord. So with that acquisition, I can only imagine how large Blackstone truly is now. Now, this deal cost Blackstone $3.5 billion. $3.5 billion to buy out Tricon and their 40,000 homes and their real estate portfolio. So the end is not quite here yet with these hedge funds controlling this rental market. And I do hope that legislation that I discussed a couple of weeks ago, the End Hedge Fund Control of American Homes Act, I hope it goes through. I hope something happens there. There's got to be some sort of limitation set because they are really, really impacting the rental market and hurting Americans here. So let's talk about one more thing. All right, so industry data. Guys, we have so many people that in our industry that share market data, real estate agents that share market data to try to encourage buyers to enter the market, buyers that might be on the fence, buyers that are concerned, buyers that don't watch the market, whether it be the rates or whatever, what have you. And I love that people share all this data, but I must throw up a slight red flag and warn you of some of the data, okay? So the sharing of rates. So a lot of real estate agents, they like to share not necessarily specific rates, not like saying, come out here and go get your 6.5% rate at this, and this. Not that. We're talking about things that they can share, right? So NAR being one of them, or even Realtor.com, they post a lot of this stuff. They have their in-house economists that are not dictating, but sharing where their market insights are, and then they share some averages and what's going on in the market. Well, I think it was NAR that uses Freddie. So a couple people have been sharing some of the rate data. On the average was 6.6% on January 18th. Well, the issue with doing this, and I love that everybody shares it because it helps encourage buyers to jump back in. Like, hey, rates improving. Let's start looking again. I think that's fantastic. The problem is that some of the information is a little bit misleading. Okay, so they're doing that one specifically is the average rate that people were buying from Freddie. Okay, but that doesn't necessarily mean it's the par rate. Okay, so what's par? Par means that you can come at me and get, just an example, a 7% rate, but that doesn't cost you anything, right? So this isn't par. Okay, this is the average cost or the average entry point for people in the market on that specific day using Freddie Mac products. So it could include people buying down the rate. It used to be on average the cost of 2 points. Now it doesn't say that on the graph, okay? But it could be par for some people. It could be a point. It could be 2 points. It could be a lot of different things. So we got to be very careful to maybe disclaim that to people, to say that, hey, this may not apply to all, because it just depends. Because that same date, I took data from Fannie. Fannie was showing 6.72, and then if you go to an independent, the Daily Mortgage News, they had it at 6.8 on average. So depending on where the information is coming from could dictate, it's garbage in, garbage out, right? So we just got to be careful how we're digesting the information, how we're proposing the information to the general public. So I do want to keep encouraging everybody, please do share that information. I think it's fantastic, and it gives great outlook on what's going on in the market and the trends, but it may not be 100% accurate for each individual buyer. So something to take into consideration. So we just want you to be careful out there when sharing some of that information. So that's what I got this week, guys. Again, check us out on YouTube and subscribe. Make sure to check us out on Spotify. We're getting a little bit more market share. I think I got 3 listeners out there, so that's fantastic. And check us out on Apple Podcasts. And we will catch you guys next week. We are going to have a new guest coming in, and it's going to be very exciting for that. And then we're also going to be doing an appraisal segment with our owner, Teresa Rose, coming up soon. So we'll catch you all next week.